Hello, and welcome to our webinar, Three Top Risks for Insurance Producers and How to Overcome Them. We appreciate you taking the time today to join us. We want to thank Insurance WebEx for allowing us to present this information to you today. We know you're busy, and we want to respect your time, so let's jump right into today's presentation. First, just a little bit about me and my background. I've been in the insurance and investment industry for about 30 years, and I'm also the co-owner of Summit Compliance Group. My contact information is included here as well in case you'd like to get in touch with me to talk about today's webinar or any other compliance questions you might have. A little bit about my company. Here at Summit, we specialize in the compliance needs of producers, IMOs, registered investment advisors, and insurance carriers, and we help our clients with a wide array of services. We focus heavily on the compliance needs of distribution, and here are just a few of the services that we offer. And of course, no presentation is complete without some disclosure. So basically, just know that we're talking about key compliance risks to provide you with general information only. We're not providing advice, and we aren't attorneys and we don't give legal advice. So with that, let's get started. So we're going to cover some general risks that you all face and then go a little deeper on three key issues that we see affecting producers and IMOs on a regular basis and what you can do to protect yourself in these areas. We'll wrap up with some compliance issues on the horizon as well. So for the sake of time, we won't be taking any live questions today, but please feel free to reach out to me if you'd like more detail or have questions for me. So let's start with some general areas of risk. Here are some common ones that pretty much all financial professionals have to deal with and are exposed to. So these are just inherent in the financial sales and service model, and you can manage these every day. So as you know, the regulations are complex and many, and it isn't always easy to know just what's expected of you. Now, wanting to do the right thing and knowing just what that means can be two very different things. Most producers we talk to say they absolutely always do right by their clients. But after some probing, some of the practices, we often find that there are some very real gaps that the producer just wasn't aware of. And having the right intent is obviously required, but having the right information to protect yourself, that's just as important. And while we can't cover everything you need to do to better manage your risks, we can cover three key risks that are very real for producers today and ways that you can help reduce your exposure in these areas. So again, if you have additional or follow-up questions about these or other areas of protection, please feel free to reach out to me directly. My contact information was just shown on slide 2, and you can go to our website as well. It's www.summitcompliancegroup.com. So one of the biggest risks you face as a financial professional is potential for unwanted attention because of your advertising. Now, good advertising can ward off unnecessary attention of your business and can protect you, whereas advertising that doesn't meet the standards and regulations that apply can open you up to a host of other issues and headaches. Your advertising is visible not only to your prospects and your clients, but to regulators and your competition as well. You might be surprised by just how many complaints and enforcement actions are actually instigated by professionals turning each other into the regulators. Whether it's done maliciously or because they truly feel your materials might be a problem, the end result is usually the same. You can get called on the carpet if your materials don't meet the many advertising standards. As you know, the insurance advertising is regulated by the individual state insurance departments, and there are 50 of those, and they tend to have differing requirements. If you're also registered to sell securities or offer investment advisory services, you'll also need to manage the securities and advisory advertising standards. So on some materials, that could mean 3 sets of regulations that have to apply. So let's look at this a little bit more. Let's start with, what is advertising? Basically, it's anything you use to garner interest in your firm, your products, your services, yourself. Those are all going to fall under the category of advertising. So only materials that are truly operational in nature, things like carrier forms, confirmations, statements, communications about your business hours of operation, and things like that, those are the only ones that are going to be exempt from the advertising regulations. You also want to note that advertising is not limited to consumer-facing pieces only. It includes materials directed at agents as well, and this is specifically called out in the NAIC model regulation for advertising. This is especially important for IMOs to understand, since the materials that they use to train, recruit, and educate agents are also subject to these same advertising requirements. So what's the big deal? Well, visibility. Regulators read the paper, they surf the web, they get your direct mail pieces if they're in your demographics. Your competitors have access to them as well, as we mentioned earlier. And remember, your audience is not only the prospect who you want to see your ads, it can be just about anybody. The regulations can be vague, and again, if you have multiple registrations, you're going to have multiple regulators. You're going to have the 50 state insurance regulators. You're going to have FINRA if you're registered as a broker. You're going to have the SEC if you're an investment advisor, or the state securities departments if you're an investment advisor with the states. So, and unfortunately, the regulator, or in a lawsuit, the judge and the jury, they get to determine if the material is compliant. Despite your intentions with the piece, you don't always get to make that final call. And what else? Well, advertising is documented. It can be used against you. So once it's written down and published, you can't take it back. So advertising that's potentially misleading, inaccurate, or just non-compliant can be a great find for a plaintiff attorney or a regulator. So, and this can open up the door to additional investigation into your practice. I mean, for example, I've seen cases where a producer's advertising got the attention of a regulator. And once that regulatory file was opened, the investigator in that case decided that, because of issues with the advertising, there may be sales practice issues as well. And they demanded that the producer turn over not only all of their advertising for the past few years, but also copies of all their client files. It was a situation sort of like, if there's smoke, well, there must be fire. And the regulators have the authority to make this request and require that you comply. But you don't want to invite a regulator into your practice. It often doesn't end well, and at a minimum, it's going to be time-consuming, and it could be expensive to go through the process of trying to defend yourself. So if your advertising meets the required standards, you can avoid the situation altogether. So advertising, quick rule of thumb, which is not always easy to comply with, because again, it's open to interpretation. It can be vague, but the client needs to know what they're buying and who they're buying it from. For example, you can't just describe the benefits of an insurance product without actually naming it. Say you're describing guaranteed lifetime income, for example. Your advertising actually needs to use the term annuity so the consumer understands, what's being promoted to them. Also, as an insurance producer, you need to be clear that this is the role you're acting in. So using language that suggests that you're a Social Security expert or something other than an insurance producer is a big regulatory concern right now. The bottom line, again, consumers need to know who is marketing to them and what they're offering, and that should be evidence in your advertising. So what can you do? Well, this should be an easy fix, but you'd be surprised how many people go it alone and think that their advertising is just fine without a review. For some folks, this could very well be the case. But given the vague way that the rules are written and how complex it is to actually interpret them in practice, we strongly suggest you have our advertising reviewed to make sure it'll be acceptable by the states where you do business. You also want to make sure that you're on top of your advertising inventory. So, for example, keep copies of all the ads you use, when you use them, where you use them, so you can produce them if you're asked. And, when you go through the compliance review process, you want to make sure it isn't just a once-and-done event. The regulations change, and so do the way that they're interpreted. So you'll want to make sure you have a process in place that keeps your materials current. So let's talk about our second risk, documentation, especially maintaining good client files. A number of things to cover here. So lack of documentation can undo all the analysis and all the due diligence you performed, and it's one of the most important things you can do, or important things to be on top of if you really want to protect yourself. So doing the right thing by clients is crucial, but you also need to be able to prove it. You have to show your work. That's where client files are so important. And yep, it's time-consuming. It can be tedious, but it's really necessary. You've probably heard it said, if it didn't happen, if it isn't documented, it didn't happen. And it's not going to be easy to recall what you discussed months, years, or even decades later. So try and tell a regulator or plaintiff's attorney what you think you did or said with the consumer is not necessarily going to be enough. You're going to want to have some proof of it. It's especially important because complaints tend to come in years after the initial sale. Keep in mind how you create your documentation. That matters too. There are good files, and then there are files that contain information that can actually hurt you. So knowing what to include and how to include it is equally important when the end goal is to protect yourself. So documentation is one critical way you protect yourself, but of course, you must be doing things the right way to begin with. The vast majority of producers are trying to do things the right way, but how do you know if you really are or not? Well, let's look at an example. So let's look at an example of a meeting with an agent and a prospect. So the prospect asks how the product bonuses work, and you walk her through the section of the carrier's consumer brochure. Prospect decides to purchase the FIA. So how are you going to document this? Well, this approach would help document that the client was interested in how the bonus worked and the agent answered a question. But it still leaves some questions. Did the agent answer the question correctly? Did the client actually understand the answer? How about this? This approach provides greater detail about the agent's answer, but still leaves some concerns. So, say, for example, did the agent answer the question correctly again? So the agent distinguished that the 22% premium bonus applies to the premium placed into the annuity in the first year, and the 50% bonus is an interest bonus that applies to interest credited. Did he or she explain the conditions under which the clients can realize the benefit of these bonuses and how they can be lost? It can be helpful to provide detail in the client notes. Now, on the flip side, too much specificity can actually create risk by causing someone, a regulator or an attorney, to question the accuracy and the completeness of the sale. So, and whether relevant information was included from the explanation. Now, how about this one? While an experienced regulator can always come up with additional questions, this approach can reduce risk for the agent. It demonstrates that the answer provided was from carrier credit materials. This allows the agent to share the risk and the liability of the carrier. It provides specifics about how the question was answered without going into details of this question later, and it shows that the client was given carrier-created information to refer to later if she has additional questions. So some solutions? Well, a consistent approach to documentation helps accomplish several things. Make sure that the aspects of the sale, the facilitation, the servicing are included and nothing is forgotten. A consistent process in how you document will explain how and where things are documented, and it demonstrates to regulators that you're following a defined process. So if a file isn't quite right, it might be just an exception rather than the rule. Also consider using technology like CopyTalk or something like that makes it easier to create the documentation, because this will make it a lot more likely that you're going to follow through on making your notes. And as I said earlier, sales practices can get you into trouble to begin with, and if you document poor sales practices, that means the documentation can be used against you. Now, some people may say, well, maybe I shouldn't document that, but remember, documentation is one of the biggest tools you can use to protect yourself, and again, if it isn't documented, it didn't happen. So take credit for what you did and what you did right. Just make sure that what you did would be considered the right thing in the eyes of the regulators and the plaintiff attorneys. So one of the easiest ways to determine how your sales practices stack up is to get an objective review. Find somebody who understands the laws and regulations, specializes in distribution compliance, and can offer you practical advice on what to do and how to do it, not just tell you how the laws are read. And of course, this is something that some compliance group can offer you. So as we talked about in documentation, how you document is just as important as creating it. Few people have received detailed training on this skill set, but it could really improve your ability to defend yourself. And keep in mind that your documentation, it should be consistent. For example, if you've got a note in the client file that says the client declined a meeting with the agent, but then later shows that the client purchased a product, you're going to want to explain that because it appears to be contradictory. And of course, it shouldn't be news to anybody who has an internet connection today that cybersecurity is consistently quoted by regulators in all industries as a top risk for anyone. So, our risk number 3, cybersecurity. Here are some companies affected by the largest data breaches to date. Big companies who have IT departments and internal controls, yet even they weren't safe from hackers. I've worked at large insurance companies for years before starting Summit Compliance Group. At my last firm, we did this exercise every year where we ranked all of our vulnerabilities, all of our risks, to make sure we were giving the right resources and attention to the areas of the highest risk. And part of the evaluation was we'd ask ourselves, what event would be so catastrophic we'd have to close our doors. Without fail, cybersecurity breaches was at the top of that list every year. This is smarter, and we all have a lot to lose because of the increased in technology. Here are some other data breaches in 2019 so far, and this one just in. State Farm just announced 2 days ago that they had a breach of what they call credential stuffing attack. So people whose online login credentials were obtained by basically a bad actor. Think about the information you collect every day. Name, date of birth, social security number, health information, financial information, account numbers. And you collect a lot of information about your clients, and it's sensitive and it's confidential. What would happen if you had a breach? Think about the Target breach. They lost credit card and debit card information, contact information, name and address. But what about you? You have a lot more to lose. You have policy value, again, social security numbers, bank account information, driver's license numbers, client children information. This is a gold mine of information for hackers. So, and keep in mind, Target spent $292 million to correct their data breach. So why is it a big deal? Small businesses, you guys are a target. You face daily attacks. Some of the challenges are because there's understanding compliance and regulation requirements. That tends to be a concern if you're not dedicated to it. You don't have IT staff that are dedicated to it full time. Budgets are also an issue. It's not cheap, to manage your cybersecurity risks, and really no one is safe. 68% of all cyber attacks were against small businesses. And And the average cost for a small business to clean up after a cyber attack is roughly $690,000. And unfortunately, kind of a sobering statistic here, 60% of small companies can't sustain their business more than 6 months following a cybersecurity attack, whether it's for cost reasons or PR reasons, reputational issues. So, as a result, the states are passing a number of cybersecurity laws. The NAIC passed a model law, which then the states have the option of adopting. As of yesterday, we had 7 states that had passed it. This morning, we found out that New Hampshire has now passed it. We have 8 states that have passed this model regulation. Here's a quick overview of states that have either passed it, though, or are working on it. So it's taking off. You'll notice that New York has its own reg. It's bright red there. Dark blue, those are those who have adopted the NAIC model reg. The green is those who are considering measures right now. So if your state isn't already affected, it likely will be very soon. So keep in mind, the NAIC model for cybersecurity, that was introduced in fourth quarter of 2017. In 18 months, this is really incredible adoption. It's taking off like wildfire. It's one of those issues that's a bipartisan issue. It's being accepted on both sides of the aisle. So what can you do? Well, understand the laws in the state where you do business. They may vary by state, so make sure you know what you're subject to. Some states have exemptions you might qualify for. If there is an exemption, don't assume that you have no responsibilities. There are still some things that a lot of states are requiring, even if you meet one of their exemptions. I think one of the best things you can do is have this security risk assessment performed. We have vulnerabilities, how you can strengthen them, and receive some personalized guidance that's specific to your business, not just a cookie cutter approach or a template or a kit. So let's talk now about a couple challenges on the horizon that we expect that we're one again is regulations, not just cybersecurity, but there's other areas as well. We've seen, for example, a number of states pass or talk about passing their own fiduciary rules. So navigating this is not going to be easy, especially if you conduct business in multiple states. Now, if the DOL comes out with their revised fiduciary rule, as they promised, we're also going to have federal regulations on top of the states. And don't forget, if you're registered, you're going to have Reg BI from the SEC as well. Again, cybersecurity, the environmental threats. One key challenge going forward will be how to manage regulations when they vary by state. We've already seen a number of states pass or talk about passing their own fiduciary rules, cybersecurity rules. There's rebating issues that vary by states. So when you're thinking about the threat to the cybersecurity environment, think about your cell phone, your tablet, your laptop, your home computer. The more we rely on these devices, the more systems we access, that's greater opportunity for you to be breached or for you to maybe make a mistake, send the wrong information to the wrong person, maybe let others in your house access your systems. So cyber criminals, they continue to adapt. About 5 years ago, had you ever heard of ransomware? I mean, criminals are getting smarter and they're getting more creative. So it's something we want to keep our eye on. So we seem to be moving towards a world also where there are 3 different standards of care. Now, in the insurance industry, we know about suitability. And investment advisors know about the fiduciary standard. But now we're being asked to deal with something that seems to be in between the two. It's this vague world of a best interest standard. Now, the NAIC met last weekend to move their best interest standard proposal forward, and we expect to have a draft, or they expect to have a draft out this fall for review. So we're definitely going to be keeping on top of this, and we can help you navigate the requirements of this rule once it's better fleshed out. So over the past several years, again, we've become used to suitability standards, and it's fairly straightforward for most of us. But today we have a lot of uncertainty as we wait to see what the states are going to do, what the NAIC is going to do, and what the DOL is going to do. And unfortunately, this means we could be forced to deal with new federal regulations as well as different state requirements. So, as I did the presentation already, it's going to be better for you to take some action now and prepare for what's coming. Insurance annuities are an important part of so many people's retirement, so it's important you take steps to protect yourself by finding solutions that fit your business. Compliance doesn't have to be complex or expensive, so don't be afraid to ask for help. So in closing, let's just quickly summarize what we covered today. So 1, don't invite unwanted attention because of advertising. That is non-par. 2, tell the story. Let your documentation support the process you went through. 3, don't ignore the threat of cybersecurity. A breach can be a door closer for you, so make sure you understand where you're vulnerable and how you can fix it. And last, seek qualified help from experts who specialize in the risks you face every day. At Summit Compliance, our goal is to protect you, so please reach out to us with any questions. And that concludes our presentation today, so thank you all for joining us.